following is an update and technical analysis on the U.S. equity markets, followed by the S&P 500 and NASDAQ 100 futures based upon the weekly, daily, and then I'll hone you in on to what I commit to, probably the best looking chart. Well, we had Amazon report after the bell with guidance that fell slightly below expectations, which served as the most recent indicator of a decline in consumer spending as we approach the holiday season, and investors overlooked the lackluster sales outlook, instead concentrating on the promising AWS profit margin, which then resulted in a significant after-hours surge as the earnings call commenced and the CFO cautioned that customers remained price conscious. Amazon stock saw a reversal, erasing gains of up to 5% and then ultimately settling in a negative territory. And then in the after hours, what a heck of a volatile ride in the after hours. And I wanted to bring to your attention on the 11th of October 2023, we're trading spot price 15,285 here on the US Tech 100 based upon the daily interval on the 11th, where I had mentioned this primary reactionary downtrend line. Big major resistance price zone correlated with the 15,281 price resistance, and the 786 Fibs retracement would offer an objective, great full position short trade setup. And here's the update. The entirety of that trade knocking on through multiple targets throughout that entire span of time here, and we knocked that 14,043 price support really to the button there, coinciding with the 200-day moving average, and the entirety of that trade was good for an 8.2% crash to the downside. And here we are, where bull traders, long traders stepped in heavily amongst the 200-day moving average support and the 14,043 price support, and that was bid heavily, especially if you're an active and or day trader. The entirety of that trade on a move to the upside, on a reflection up to that primary resistance zone, was good for a 1.1% pop to the upside. And I believe we've reached a critical juncture where we are slightly trading above, right below the 50% Fibs retracement, called 14,330 price resistance. And that is going to be a very telling big moment inflection point within tomorrow's trading session. And I'm going to take you out to the S&P 500 weekly interval, the much larger picture to the entire stock market here. And here we are trading amongst the 41, 71, 60 price support, correlated with the 50 weekly moving average. Call it a dual line of price support, whereas bull traders, long traders need to defend this key inflection point really at all costs. Call it a multi-year price resistance and reactionary high and low transitioning point, with just a multitude of reaction right across that entire sphere there, providing which would be a great risk-reward ratio for a move to the long side if and when bull traders and or long traders are successful in defending this key inflection point. Whereas bear traders, short sellers, they want to see a solid undercut, breakdown, additional sell signal down below this key inflection point to go on to retest the 40, 50, 41 price support. And then additionally, the 200 weekly moving average there. We do have confirmed crossovers here in the moving average convergence, starting to test their zero line thresholds as of now. This is a big monumental key inflection point for both the technical momentum indicator dimensions and the outright price action and price support resistance levels here off the weekly interval. Zooming you into the daily interval, and I had mentioned in that previous video how imperative it was for long traders and or bull traders to defend this benefit of a doubt primary reactionary uptrend line based upon, call it, multi-year price support off the October 2022 lows, which concluded the near-term bottom and catalyst to this much larger, big, sustained rally. I'll call it the AI bubble, huge obesity drug rally, and that was just a monster move to the upside. And here we are, starting to split down below the 236 Fibs retracement, called 4181 price resistance, and the 4171 weekly. I had color coded it tan, which correlates with the weekly interval. We are snapping this key inflection point as of now. We went on to talk about a perfect breakdown and then additional back test right off that key inflection point, offering a great additional short trade setup, especially if you're an active and or day trader. Really knocked it to the button there, correlated with, again, the 4188 price support and the 236 Fibs retracement, and that was rejected impulsively right off that intraday trading session. And here we are, trading slightly below it, not a hard breakdown sell signal yet, but I would have liked that clean, solid candle close as we got in that previous primary reactionary uptrend line. But again, we had a nice, again, bounce right off that 4188 price support, especially, again, if you're a day trader, active trader, really to the button the other day there in that session right up. Ended up coming across for a 1% move to the upside, got rejected amongst the primary reactionary uptrend line, back tested the 382 Fibs retracement, correlated with the 4264 price resistance. Again, really to the button there. Talk about reaction right across this entire sphere here. Back tested it, and here we are, trading slightly below it. And that is a bearish, very bearish sign that we've taken out the 200-day moving average and the primary reactionary uptrend line. If we get that solid daily candle close tomorrow, I would only suspect a continuation of a sell-off right back down to retest the bottom of the 0 Fibs retracement, correlated with the 4065 price support there, where bull traders and or long traders would have to defend heavily really at all costs to avoid a much larger breakdown and a wave of selling. Taking you out to the much larger context of the weekly interval off the US Tech 100 futures. And here we are, trading in what I would call a significant cup and handle bullish continuation pattern, with just a ton of reaction right across this entire sphere, where the handle is starting to be retested at the bottom of that, coinciding with the 618 fibs retracement, 14,352 price support. And we are at a very monumental key inflection point, whereas long traders, bull traders need to step in really to the button here, start to reflect and defend the bottom of this potential handle of the cup and handle bullish formation pattern, really at all costs. Once again, if we go on to take that level out, it will only deter and break the structure of the formation and foundation of that handle on a retest and re-challenging of the 50% fibs retracement. Call it a 13,563 price support correlated with the 50 weekly moving average, and that will be the utmost, the line in the sand, big test, big move there for the NASDAQ 100 weekly interval. Really at all costs to avoid any further breakdown, especially when it comes to the key moving averages and some of the technical momentum indicator space right down below that key inflection point. I would only suspect a further selling and or a potential breakdown here in the moving average convergence, only ushering in an additional damage here in the price percent oscillator, and that would only infuse a lot more damage. And then upon zooming you in to the NASDAQ 100 daily interval, and again, we had a nice clean divergent high, really shorted from the top here, had a breakdown sell signal off this primary reactionary uptrend line, end up catching a wave of that short trade setup, bounced off that key price support really to the button. An additional bigger breakdown sell signal here, had a reflection double top off this primary downtrend line, and ushered in a much larger wave of selling. And I had mentioned in that previous video how imperative the 14,558 price support really was there, and was deflected and heavily defended like the Great Wall of China there, with multiple reactionary lows right across the board, where bull traders and or long traders really bought it up. And I had mentioned, if we took that level out, there would be a wave of selling, forced stops, forced liquidations, margin calls, and talk about that, just the velocity of that red candle close below that key inflection point, just completely smashing out a bunch of stops to go off, back tested the 50% fibs retracement really to the button and got rejected pretty impulsively there. And we are just trading really in no man's land between price support and resistance. And upon zooming you in to the much closer near-term interval within the 60-minute time frame, we are at a key inflection point where we have constructed a narrow to wide range primary channel here. And I believe it has been heavily validated with multiple, just a ton of reaction right across the entire sphere here. Reactionary highs right across the board, ton of reaction right amongst the bottom of this channel here. And that was bid heavily right off that key inflection point into the Asia open there. Reflected, we have the tan coded color daily interval price support and resistance levels. And during that intraday session, it looked like we were going to break down right below it, had a whipsaw-like reaction, false bear trap, ended up coming on to backtest this key inflection point once again off this bottom of this primary channel. And here we are, reflected right amongst it, and we have been heavily defending it. What has been so significant here in the near term is we have a bullish divergent low with positive and bullish divergences, with a confirmed bullish crossover here in the moving average convergence and the stochastics 1033 as an early indicator of some health being poured right back into the technical key momentum indicators. And these are some key levels to watch, especially if you're an active and or day trader, to really hone in. Whereas again, the long trade setup, in my opinion, belongs within the risk reward analysis of where we are trading where we are trading at right as of now, where we additionally have an unfilled gap here right off that key inflection point above the 14,297 price resistance. If we can go on to really take that key level out, maybe on a complete unchecked backfill of the gap there, and then additionally that next target up to the 14,442.80 price resistance, and the daily 14,558 price resistance. And then ultimately, if we can take these levels out, have a nice clean short covering rally right back up to retest the top of this primary trading range, this primary top of the primary channel, for an additional move to the upside for any active and or day traders. And what will be so significant if we go on to retest and take out that 14,297 price resistance will be the additional potential divergent low within the daily interval time frame, and we will have positive and bullish divergences on multiple indicators within the momentum sphere, only increasing the odds for a much larger move to the upside. Whereas again, short sellers, bear traders, they want to see a complete undercut of this 200-day moving average, undercutting any potential divergences that we would have had, and have an undercut all-out waterfall style event of a much larger big move to the downside.